Hello and welcome. This is Bloomberg Quint. I am in conversation with Reliance Infrastructure's ED and CEO Punit Garg, who is joining us on the phone line at this point in time. Mr. Garg, good afternoon and thanks so much for taking the time out. Let me start off with the question on auditors who have raised various concerns on the subsidiaries and associate companies. We want your view, and we also want your view on the several guarantees which are worth what they are worth in the short term, say around the time span of around 3 to 6 months, and what the risk of devolvement of some of these securities. That is what we wanted to know.
Good afternoon, Agam. As far as your question is concerned, let's understand that the current environment in country has changed auditors per se. E&Y has been recently banned by RBI. PwC can't take the new audit for last 1 year, and KPMG and Deloitte has been named by SFIO and charge sheeted. So I think the auditors are working under these circumstances. But nevertheless, let me answer your question. So there is an overhang of the environment. Whatever they do, they are kind of coming with more disclaimers and protecting them. And I'm not saying everything what they write is wrong, but that is something which in the background you need to understand and be ready with it. But coming back, I think Reliance Infra, when you look at it, it has only one operating business, which is EPC. Which is, the order book of 28,000 crore, of course, but rest all is consolidated in Reliance Infra. So when you look at the road businesses where the delay happens and the payments are due, and if there is a concern shown in terms of the debt repayment over there, it automatically comes in the, the parent company as the notes to the accounts, and auditors reflect on that. There is nothing wrong. When you look at Reliance Power, the result was declared on 8th of June. That had going concern over there. And if it is reflected into the accounts of or the notes of Reliance Infra, that is but natural. So I think when I look at a consolidated accounts and those concerns, or whether for standalone because of the current issues, I am not overly concerned because each of my business is doing very well. When I look at my BSES business, which is the power distribution in Delhi, it's a EBITDA positive business. It has very low debt and it is able to meet all its obligations. And it is a cash, I would say free cash flow positive business. When I look at my defense business, which is in a nascent stage, is doing well and doesn't require any more cash. When I look at metro business, there is a concern of debt, but where it comes from, it had a resolution plan which was approved by, I would say in principle, approved by the lender in March, April, but because of the RBI circular being quashed by Supreme Court, it couldn't go forward. So what happened in that? Now, as the new circular has come out on 7th June, lenders had a meeting and they found the plan which they've approved earlier is good to go. They want certain revalidation because the quarter has passed in between, which should happen in next few weeks. So we are good to go in metro as well because banks have agreed in principle to the resolution plan which was proposed to them a quarter ago.
Okay.
When I look at my roads portfolio, I have no concern on that because I am not basically stressing on that, or I'm not spending too much time in terms of refinancing, restructuring the road portfolio. As you know, we announced early on that we would be exiting the road portfolio end of this year. We have already announced our one road, Delhi Agra, for 3,600 crore, where the equity value of 1,700 crore is, coming in. We would announce in next 60 days, as we are in the advanced stage of finalizing the agreement for remaining road portfolio.
Right.
So I think we are good to go as far as that is concerned. And I would say that as the liquidity come in and as we pay off our at least 50% of debt through this road investment itself, right, we would not see any going concern, around the company.
Okay.
Even at this.
All right. So I get that, but let me just come down to Reliance Power specifically in this case, because the market value of your stake is at around 500 crores as against your investments, which stands at around 5,500 crores. Why didn't you impair these investments? That's the first part of my question. And the second part is that auditors have also raised concerns on your ability for R Power, and there is still some receivables worth 1,400 crores. If you could give us an explanation on this one as well.
So let me just first address the receivable part. You all know what has happened to the gas-based power plants in India, and Samalkot was one of those power plants where Reliance Infra had provided the equipment and was to receive the money. But the good news is that out of 3 units, 1 unit has been already contracted for Bangladesh, where it is going, and the money would flow in from there to us. The second point, I think Reliance Power is a strategic investment of Reliance Infra. We are not a trader or bought that from the marketplace, that share that we need to do a MTM. We have a control of the company, and we run the company, and the fair value of that investment, which is done as a Reliance Power, is much higher than what we have in our book. So there isn't any need of, anything to do on the mark-to-market basis. Plus, accounting standard 28 very clearly say the practice under the Ind AS, what is followed from day one, must be continued unless and until there is a concern expressed, due to deterioration of the market, not for the trading purpose, on the investment side. And I think that test is always performed on quarterly and yearly basis. So we are good to go there.
All right. So then when it comes to your FY19 balance sheet, your current liabilities stand around 16,000 odd crores, a little over that. And this is, of course, much higher than your current assets. So my question is, are you confident that you will be able to meet your debt obligations in the near term as well as in terms of repayment?
Yeah, there's no doubt, absolutely. And I think it's a very good question you are asking. I'm sure you're aware that, when you look at our balance sheet, that we have regulatory assets under approval of, though the balance sheet may show 16 to 18,000, but in actual terms, over 22,000 crores. We have arbitral award, which is over 8,000 crore awaiting that. So when I add that, there is absolutely no concern. That's number one. Number two, I am really looking at that even if 25%, and I'm saying that absolutely conservative way, when I look at it, 25% of that I am able to get this year, which is 7,500 crore, there won't be any debt left in the books. Rather, I would be sitting on a cash pile. And I think that's the happy state which we want to achieve at Reliance Infra.
Okay. Also, sir, with respect to the investments made in infra to the amount of recoverable worth of around 7,083 crores, can you explain why these advances were made and what is the financial strength and the probability of these companies repaying the amount?
Agam, the important point here is that business as usual advance, it is business as usual, and these are business as usual advances for our EPC business.
Okay.
So when you are constructing these roads, you make these investments, and certain things are delayed because of the land acquisition, which is done by the government, provided us to complete that. Yes, we have done some provisioning also of that of worth 2,000 crore this time, but that is all could be reversed, because as this project gets completed and we receive a PCOD or COD for that, so that becomes a good project. So it is like CAPEX, which remains, before realizing in your book, it remains capital work in progress. I think it is something similar in EPC, that you have expense that much of stuff, but you can only realize it once the project is completed and you got paid for it.
Okay.
So we are not overly concerned for it, and we know what we are doing, and I think that's moving into the right direction.
So also in the notes, Reliance Infra mentioned that the Reliance group of companies has supported an independent company in which they hold less than 2% stake to undertake contracts and assignments for a large number of varied infra projects. But neither the auditors nor Reliance Infra mentions the name of the company. Can you tell me a little more about what this company is, sir?
So my answer to this is that for EPC projects, you use several companies. You give them orders. So one such company is used, often by us, and that is where we execute the large projects, using that as a vehicle, and that company, like anyone, as look at the ancillary. So you can use the same terminology here, that we developed it as a, to supply the labor, to supply the stuff for us. So they do a lot of work. They not only they do for us, but they do for other group companies, and they do outside as well the work. And so yes, as I was explaining you earlier, there are some advances given to them, and which is, as I explained to you in nature, which is the projects under completion, and as the project gets completed, the payments would come through, and those advances get squared off. So it is a business as usual.
Right.
Now, when it comes to that, they did not. So if the auditors say, which they have been signing off these accounts until third quarter, between third quarter and fourth quarter, there is no change. As far as those advances are concerned, you can certainly look at the balance sheet.
So, but if you could just give me the name of the company too, sir, if it's possible.
No, there are many companies. So when you look at it, it is difficult to provide, do which company. So they want balance sheets. These companies will finalize their balance sheet by September, because the unlisted companies have time until September, and these would be available and they would be satisfied.
Okay.
And so we are not overly concerned on that.
Okay, so just two more questions then, sir. About your exceptional loss for 8,500 crores in the fourth quarter, the impairment that you have taken. Can you give us a little more of a breakup and as to what this contribution has come, where this contribution has come from?
So that's a good question. As you know, in Mumbai, we sold our Mumbai power business of generation, transmission, and distribution last year. We have taken against that one-time impairment for number one, our investment in Reliance Naval of 4,500 crore. As I explained to you, in Reliance Power of 2,000 crore, 1,742 crore and 287 crore. Out of that, that's a breakup of 2,000. And 2,000 crore, as I said, we gave a provision for the EPC advances we have given. So that's the, I would say, high-level breakup of that 8,500 crore.
Okay, and so just a word on your debt then. When it comes to your overall picture, how much is your debt at the end of FY19? What are your plans of paying them? Can we expect a change in your debt mix, perhaps the interest mix, going ahead in the next year or so? And also, you signed an agreement to sell about 100% of your Delhi-Agra toll project for around 3,600 crores. So by when is that likely to be executed? And would that also help you pay down your debt?
Thank you, Agam. Good question. And let me start with the last question first, and then go into the reverse order. As far as Delhi-Agra road is concerned, it was a 3,600 crore deal, which is likely to consummate within next 60 to 70 days. We are going through the condition precedents, to certify that for closure, number one. Number two, yes, Delhi-Agra road would bring down our debt by 2,000 crore or so. Number three, as we exit the road portfolios, within this fiscal year, that would bring down our debt by roughly 8,000 odd crores. At end of 2018 March, our debt position was somewhere around 31,000 crore. At end of 2019 March, our consolidated debt is in 16,000 crore range. When I look at a standalone infra, it was at 19,000 crore end of 2018. At end of 2019 March, it is at around less than 6,000 crore. As I said earlier, through the road monetization plan, I believe we would, reduce our debt to a significant lower level. My interest cost has come down from 1,500 crore to less than 600 crore, and hopefully with the regulatory assets, which are under approval as well as arbitration realization put together, I should pay off with that realization all of my debt, and I should be sitting on cash, and I should say I would be on a zero debt and in position to enjoy and have the knocks of the bankers that take the debt.
Okay, and
but
so
I do not require any more debt in Reliance Infra.
Okay, all right, so fair enough. And just finally, very quickly, sir, a word on your Reliance Naval debt resolution, orders in hand, orders you can expect.
Well, the 7th June circular has just come in. The meetings of all such companies have started. So we are meeting with the lenders. Our resolution plan is in place. We believe that within the stipulated time of 210 days, which should get over on 5th or 6th of January 2020, we should, much before that, we should have a happy resolution for everyone. You must remember that as the private shipyard, there are only two companies in this, L&T and Reliance. Bharti and ABG, both companies have gone through the liquidation, rest are with the government. So I think it is in the interest of the nation and the security of the country that these shipyards should be resolved and should be running because it is the future of the country.
Okay, Mr. Garg, we'll leave it at that. Thank you so much for taking the time out and speaking to us about a whole host of issues and also taking us through some of the developments with respect to Reliance Infra. We wish you the best for the future.
Thank you, Agam.